I remember after our presentation, someone was like, but guys, you cannot go wrong with property. And then we're like, what have I been doing?
Man, let's give you real content. That's what you know us about. Let's give you real content. You can actually lose money renting out or trying to rent out a property that's worth 6,000 and putting it on the market for around 8,000. So now let's think about this, right? So say for instance, you have a property and it was supposed to rent out at 6,000. And now you're losing 2 months worth of rent. That means that you are actually losing out on 12,000. You need to factor in the costs that you actually incurred. So now it's the rental amount that you actually lost, and you also lost out on the expenses that you had for you to actually hold on to that property. Now, looking at saying that, you know what, I don't mind even if I don't get the 8,000 and I'm settling for 6,000, this basically means that you are able to actually cover costs, but now only if you ran the numbers correctly and it actually makes sense at 6,000.
We've got a story to tell. I remember when we bought a property and then they told us, gents, they have not increased rent for the past 5 years. And we got there in suits and blazers, thinking that we're going to get there and tell them that, you know what, guys, the new sheriff is in town. You guys are going to pay 10% more than how much you were paying before.
Neo had that grin on his face.
I mean, it's only human nature, especially as a property investor, to be wanting more. However, now, you need to be practical more than you wanting more when it comes to property investing. What we are saying is that you really need, it's a need that you are as practical when it comes to pricing.
You'd want to go around to estate agents and ask him or ask her that looking at your property, how much do you suggest that you sell your property at? And now the estate agent that you're actually working with needs to be the best in that particular area. I mean, when I'm trying to sell my property, I want to work with the best. I'm not just trying to work with somebody that's getting by or somebody that just wants business. I'm trying to work with the best because I know that if I do have the best, they're actually going to give us the best possible price in that particular market.
I mean, it can't only just be us who was thinking that let's increase rent by 10%. I'm sure you guys have heard that analogy that every year you can increase your rent by 10%. But now, is it really practical? Because last thing you want is increasing it by 10%, the tenants leave, ultimately there's void and vacancy. So if you find yourself in void and vacancy without having tenants because you were pushing for the 10%, ultimately that is going to influence your return on investment. So my point number 2 in terms of where you or how you can lose money when it comes to property investing is that I don't know what is happening at that point in time. Maybe we all go through this, especially once you've bought the property and then it's about to go to transfer, right? We're thinking that maybe the lawyers will call everybody to a table, offer us cappuccino, and then we all sit and discuss.
Cappuccinos and flapjacks.
What's a flapjack now?
I don't know.
We're going to sit around and then we're going to be discussing the terms and conditions, whereas that's not the practicality of the situation. It's very important you as the property owner, the new property owner, to be proactive towards transfer. So what am I saying by saying transfer? Because usually what will happen is that everybody submits their documents, and then once everything is in order, the bank gives the go ahead, and then only you'll be getting a message that Mr. So-and-so, by this month you're good to go. So if you are inheriting tenants, you might find yourself in a situation if you are not proactive. What do I mean by saying that? So you find yourself in a situation whereby your tenants paid the same management company as the previous owner. So let's just say that it was before month end. So now you find yourself in a situation where whether it's deposit or it is that monthly payment. So now you are like, guys, okay, let's go. I'm quite excited. So you guys will be transferring money to my account, only to find out that they already paid it to the previous owner's account.
And now please do keep in mind that when you are actually going to purchase a property, once the property is actually registered in your name, the bank will actually require the bond amount from the next time that you say that they should take money. So say for instance, if you had said that the bank should actually take the money on the 7th of the month, and now it's the 28th of the previous month, when it comes the 7th of the month, the bank will be sure to actually take the money from your account. Here's a situation. It's the 28th of the month and the property just transferred today. The tenants actually pay the previous owner, and now you hadn't actually went to the tenants and had that conversation in terms of, I'm going to be the new sheriff. I'm going to be the new sheriff and please do pay directly into my account. Now the problem is that at the end or on the 7th of the month, the bank will actually come to you and require that amount, the bond amount. So now always make sure that once you get the transfer documents that's saying that you are now the new owner of the property, make sure that you go to the property as soon as possible and actually have that conversation with the tenants. And now something that I'd really like to urge is that you don't only start the conversation on the day when transfer actually takes place. You start the conversation when you purchase the property. Ask the estate agent to actually have a meeting with the people that are living in the property, say for instance halfway through the transferring and also after the transferring, because now what might happen is that the tenants would not have that relationship. So now you won't trust everybody that's going to come into your house and say that they are the new owners of the property. And the last point needed to be the power team. You need to understand that with your power team, some of them will be actually saving you money and some of them will actually be making you money. So what do we mean by this? Your contractor, it's their responsibility to actually save you money. As much as money will be coming from your pocket, giving it to this property or to this contractor to actually make sure that he uses the money as efficient as possible. So now if he's able to actually negotiate the price of one brick from 5 Rand to 1 Rand, that's a huge save on your side. And now looking at the estate agent's job is to make you money. So these are your sales agents. So with what the job of your estate agent would be to actually market your property in the best possible manner so that we get the best possible value for your property.
The personal example that I want to use is your accountant. So we will be having an accountant at our event. So
I'm really excited about it, eh?
You best be sure. I mean, we're just going to give you a taste of what he will be speaking about. So the thing about a power team is that we're referring to individuals within the property, within your property journey, right? They'll be having a direct influence. So some of them will not actually be making you money. However, they will be saving you money. Because if you are asking yourself, why should I have an accountant? I mean, you're like, but that's an extra 5K that I'll be paying him annually. However, now, if they are able to advise you when it comes to tax, you find out that you won't be only saving 5K, you'll be saving way more than 5. Ultimately, what I'm saying is that you need to be at the property workshop on the 5th of March in Glen Vista so that you can hear more about the tax benefits when it comes to owning the property under yourself versus the company versus the trust.
I mean, I'll give you a bonus tip, right? So now when you're looking at investing in property, you need to make sure that you have the general understanding of how to actually invest in property. Not even general understanding. You need to have the specific information in terms of what type of property are you looking for and how to actually run your numbers. The reason why I'm saying this is that a lot of people will come to you with deals, so-called deals, that are enticing. And now if you don't really understand how to actually invest in property, chances are you might buy into the deal. And now remember, once you have actually signed that offer to purchase, it is totally up to you that you need to pay, or you are actually obligated to do a monthly payment to the property in terms of bond and your rates and taxes. So now make sure that before you actually purchase the property, before you actually sign the offer to purchase, you understand what that offer to purchase is and you understand that what deal are you actually putting yourself into. Is it a good deal or a bad deal?
The thing about property investing is that if you find yourself that you're in a deal that doesn't make sense to you and you don't want to be attached to it anymore, it might have a huge impact on how you are looking at property investing. I mean, property is not like a shirt. We always give this example when we're speaking, when we're interacting on Zoom with clients, that if I don't like this shirt, or if I bought a medium shirt and I want to get a smaller one or a large shirt, I just go back with the receipt. Property doesn't work that way. You need to pay your transfer costs again. You need to pay the estate agent again. You don't know how long it will be on the market, and I'm telling you right now that in that whole process you can spend just a minimum best case scenario of 30,000. It can't even get to 100,000. So what I'm trying to say, it can get to 100.
Definitely can
Easily get to 100. So at the end of the day, what I'm trying to say is that you need to be aware of all these costs, because some people that are looking at property investing in terms of it's a long-term game and you'll never get wrong in property, they're really focusing on appreciation. So they are not even separating themselves with the business itself, because whatever loss the business is making, I'm able to still take out money from my pocket and put it in the property business. However, now if you're going to literally separate yourself from the business, you literally see the income versus the expenses, and you will know that with property investing you cannot just go a little bit wrong, it can go very wrong.
I mean, with less than 2 weeks to actually the event, make sure that you book your seat right now. Or if you do know somebody that wants to invest in property, don't be greedy, man. Send them the link to actually come to the property workshop.
It's going to be epic. See you then.
Nong, well.
Invest like a pro.